Hey traders and investors, it's Serge Berger here. We have a lot of banks and brokers reporting earnings this week as the earnings season kicks off. Usually you tend to have just a couple of the big banks report the first week for earnings season. This week is a little different, so it's definitely something to look at. I think this could kind of make or break this the broader market in the near term. Specifically, I'm going to focus on JPMorgan and Wells Fargo. Both of them scheduled to report Wednesday, January 14th, before the open. And I want to just show you that the financial sector in general, we'll just look at JP Morgan, but you'll see some of those big banks have been trading in a very choppy fashion, really since November, after the brunt of the October rebound took place. It's been extremely choppy. And what I see in JP Morgan here specifically, first off, is a very defined support at a 200-day moving average. And 200-day moving average historically hasn't been all that important for JP Morgan, but since mid-December, it's now found support at this area three times. And I think that's important to watch because very simply, if we see this stock meaningfully drop below there, we could certainly see a retest of the October low. So that's extremely important to watch for JP Morgan. On Wells Fargo, it's actually not a whole lot different. It's a little bit cleaner. We've here too, I've seen a lot of volatility, and we're seeing that the 200-day moving average too hasn't really been of a whole lot of help. You can see Wells Fargo sliced right through it in the first part of in mid October before rebounding very sharply. But what we are seeing is a bit more of a confluence zone that the stock is coming into, sort of made up of its 200-day and 100-day moving average, and 200, 100-day. But more importantly, we've seen a little bit of consolidation down here. So again, we're kind of retesting the early January lows. Very simply, for Wells Fargo, if we drop below these lows, somewhere below 51.50, something like that, I think here too, you will have an opportunity to see this stock drop a whole lot lower before it finds better ground. So very important is that I think instead of gambling ahead of these earnings and opening positions, make sure you wait it out, wait for these stocks to report earnings, and I think the setup afterwards will be a lot cleaner. Or if there is a setup, because there's not always a setup, but if there is a setup, it'll be a lot cleaner and you have a lot less up and down gap risk once earnings are out. I hope this makes sense, guys. As always, if you have any questions, you can hit me up on Twitter. My Twitter handle is SteadyTrader. Otherwise, you can go over to thesteadytrader.com and sign up for the daily trade alert service.